Hi, my name is Ciara Jones, and I am currently a junior in the Applied Investment Management program at Marquette University. Today I will be presenting Moncler S.p.A, ticker MONRF, a fast-growing luxury company that is trading at a discount to the sector despite their superior quality. Moncler was created in the mountain village of Grenoble in 1952 with a focus on alpine sports clothing, but has grown to become a global lifestyle brand with a 14.6 billion market cap. Headquartered in Milan, Italy, Moncler derives a majority of their revenues from Italy, mainland China, Japan, and the United States. Although mostly known for its skiwear attire, their recent acquisition of Stone Island will expand their product line into knitwear, shoes, and accessories. Moncler has long been recognized as a leader in alpine sports clothing and is a growing contender in the luxury apparel sector, expected to grow at a 4.82% CAGR from 2021 to 2025. Prior to COVID-19, Moncler experienced consistent double-digit revenue growth, beginning in 2016 with an average 16.6% year-over-year growth until 2019. This growth can be attributed to a rise in the brand's popularity with millennial and Gen Z shoppers, as they accounted for over 40% of the firm's revenues in 2020. Through benchmark analysis with competitor Canada Goose, they are shown to have a less volatile top-line trend. They are able to further distinguish themselves through their ESG commitment, consistent EBIT margins, and lower multiples relative to their competitors. Recently, Moncler announced the acquisition of Stone Island, an Italian knitwear brand, aimed to reduce current sales restraints due to the seasonality of outerwear. Factoring in the brand's popularity with Gen Z and China, the Stone Island acquisition, and margin performance relative to their competitors, it is recommended that Moncler S.p.A. be added to the AIM International Equity Fund with a target price of $77.09, representing an upside of 27.64%. Beginning in 2018, the Moncler brand launched Moncler Genius. The project helped them achieve 22% year-over-year growth in 2018, with net income increasing 33% to $400 million USD. The first digital project increased digital impressions by 40% and unique visitors by 59%. Moncler recently unveiled plans to continue to grow their Moncler Genius project by pivoting their 2021 annual presentation away from Milan and into China. Soaring Q4 sales of 26% in China highlight the rapid growth of China's winter clothing market. Additionally, by partnering with A-list and emerging celebrities in marketing campaigns, Moncler has become a leader in the quest for Gen Zers' attention and dollars in China. The acquisition of Stone Island, announced in December 2020 and closed on March 31st, helps to deseasonalize the brand with their luxury sportswear product line. Stone Island resembles Moncler 10 years ago, and prior to COVID-19, Stone Island demonstrated top-line growth of 24% and a CAGR of 20% since 2011. The firm aims to double Stone Island's sales in 5 years, from revenues of $285 million USD in 2020. Stone Island recently announced a multi-year partnership with New Balance, signaling growth opportunities through collaborations with other brands. Relative to their competitors, Moncler demonstrates a healthy financial structure that will allow them to become leaders in the luxury sector post-pandemic. In 2019, Moncler experienced an EBIT margin of 30%. This margin put them in second among Hermes 34% EBIT, Kering 30%, Louis Vuitton 21%, and Burberry 16%. In 2019, the firm had yet to be considered a luxury industry contender, yet performed well in the sector and outperformed local Italian designer brands. With the acquisition of Stone Island, margins will further grow, as Stone Island has demonstrated EBITDA margin growth from 8% to 31% beginning in 2011. To demonstrate the growth of popularity of Moncler in comparison to competitor Canada Goose, a Google Trends analysis was performed, which highlighted that Moncler surpassed Canada Goose in interest for the first time in 2020, and introduces the idea that rising popularity will help Moncler achieve growth similar to Canada Goose as it began to peak in 2014. In order to reach an intrinsic value for Moncler, a 10-year DCF model was constructed, using a terminal growth of 1.5% and a WACC of 6.83%. An intrinsic value of $74.39 was reached. A sensitivity analysis of plus and minus 25 basis points on the terminal growth rate and plus and minus 50 basis points on the WACC range from $37 to $143.23. Using a price-to-earnings multiple of 70.92, an intrinsic value of $83.68 was calculated. Furthermore, an enterprise value to EBITDA was calculated using a weighted average of 31.73, resulting in a value of $86.72. By weighing the model 75, 12.5, 12.5, a price target of $77.09 was reached, representing a potential upside of 27.64%. The first risk is the brand image after the Stone Island acquisition. Stone Island is still not considered a luxury brand despite their niche position in the knitwear market. The acquisition may lead to a discount to Moncler's current position in the luxury sector. Second, the cannibalization between online and offline sales. If the internalization of online sales develops faster than originally projected, Moncler may have to review the retail store expansion. Finally, product counterfeiting and protection of IP. With an average price point of $1,500 USD, Moncler must fight against counterfeit items that try to replicate the status symbol of the Moncler brand. Moncler is led by mastermind CEO Remo Ruffini, who has been wearing the brand's clothing since he was a teenager. Working alongside Ruffini is a board composed of 36% women and 73% of members less than 60 years old. CEO of Stone Island, Carlo Raviti, will join the supervisory board of Moncler and will become around a 4% shareholder in Moncler. In conclusion, Moncler has demonstrated consistent growth in brand momentum with an opportunity to further grow with the acquisition of Stone Island that shares Moncler's similar vision of creative innovation while remaining true to their heritage. Additionally, their healthy financial structure, given their EBIT margins and trading well below industry multiples, makes Moncler a strategic investment in the luxury sector. If you have any questions, feel free to contact me. Thank you.